This is Pat Walker at MissionWinners.com doing a training coaching video on a Sunday here. I was out and about, and something I love to do. I wasn't here for Friday. We were traveling. We were gone. But regardless of that, one of the things I love to do is educate. And there are various tactics that you can use that will help you in analyzing the internals of the markets. This program right here is called MarketSmith. I was in the beta test group in the development of this original product when it was called Daily Graphs Online. Now, over on the left is the S&P 500, the spiders. I always like to look at the spiders. And over here are the daily market indicators. The daily market indicators on the New York Stock Exchange. And this is the important right here. I'm not concerned with oscillators and stuff like that, but right here, the internals of the market. The 10-day moving average of up volume and down volume. Up volume is the blue line, down volume is the red line. Now looking here and looking over here, this is the same date, by the way. I want you to know I'm doing apples to apples. On the close, on this date right here, July 8th, which is also here. Take a look in the corner here. You see where it says July 8th? July 8th. What's the S&P? What are the spiders doing here? You can say, well, Pat, they're going sideways. Down a little bit, but they're basically just going sideways. You're right. But the 10-day moving average of up volume, even though the spiders are going sideways, the up volume is dropping. See that? The blue line is up volume. Now you can say down volume is dropping also. So that's good. That's good. But with the market going sideways, you'd kind of like to see up volume hanging in, and it's just dropping. Advance this one day. Advance this one day. So now we're looking at July 9th. The market fell and closed up, and the up volume picked up a little bit right there. You see the blue line hook up just a bit? That's good. That's good. We always study price and volume. Look at this bar. It fell and reversed and closed up. But what is missing? Volume. Where's the power? Where's the power? Now, we don't forecast. We just look and say, well, we fell and we rallied on less volume. Up volume picked up a little bit. The trend is still up. Advance it. You don't freak out. Advance it one day. So now we're looking at July 10th. The spiders went up and hit highs for the move on a pickup in volume. That's constructive. Up volume, right there, didn't really pick up that much, but it's a moving average, so we don't panic. And again, this is a secondary indicator, but it's one that is relevant. If the market's hitting highs, you would like to see up volume hitting highs. Now, down volume has dropped off. That's the red line, so that's good. Advance it one day. Now we're on July 11th. The market closes up on the day and closes near all-time highs. Volume dropped off. That's a slight negative. Market hit highs on a slight drop up in volume. Then we combine it with the 10-day moving average right here of up volume actually dropped down a little bit. See that? Advance it one day. Boom, boom. Now we're on July 12th. The market on July 12th, this day right here, hit all-time highs. And I was pointing this out to VIPs every night. So this isn't a surprise for our members. They knew about this. Every night we do this video recap and we show what's going on with the market internals. And again, I'm not interested in oscillators and MACD and RSI and all that other stuff. I don't use it. Now, if you do, fine, fine. We don't. We just look at the markets and the internals. Right here, market hit a high. The spiders hit a high on a drop-off in volume. That's a negative, correct? Then you combine it with this. The 10-day moving average of up volume fell. It actually fell. The market's hitting highs. And up volume, look at the line. Look at this slope down. Up volume's dropping off even though the market's hitting highs. Advance it a day. We're on the 15th now. The 15th. Market hit highs again. Look at that. All-time highs on a decrease in volume. Look at the volume. Market's going up on steadily decreasing volume. That's not good. That's not what you want to see. It's just common sense. And the 10-day moving average of right here, up volume, keeps falling. It keeps falling. Advance it a day. We're on the 16th now of July. There we go. The market fell on a pickup in volume here. That's a slight negative. See that? Goes up on decreasing volume every day, and then it falls on a slight pickup in volume. And the 10-day moving average of up volume still slipping. Even though the market's basically right knocking on all-time highs, look at how it's been slipping. Advance it a day. We fell again on a pickup in volume. See that? That's a negative. Is it the end of the world? No. Does it mean sell everything? No. You always follow the price action of your stocks also. You combine both variables together. But the market's falling on a slight pickup in volume. And look at this. The market, even though the market is just 2 days off, 3 days off all-time highs, look at the new highs steadily dropping off for a couple of weeks. And the new lows just starting to pick up. Advance it a day. And we fall and we reverse on a pickup in volume. That's constructive. The 10-day moving average of down volume, though, now has surpassed up volume. See how it crossed over? Slight negative. This whole time when this is happening, I'm telling the people, I don't find a lot of great setups that are really working here. We'll continue to be disciplined and not go crazy, go on margin. We'll be cautious. Advance it a day. It runs up and then drops and closes near the lows on another pickup in volume. Look at the daily market indicators. The 10-day moving average of down volume has surpassed up volume. Up volume is still falling. Even though the market is knocking on highs, the point is this. In this section right here, when the market's rallying up, right here, the 10-day moving average of new highs is steadily dropping. I wanted to show that to you. It's just something that gives us a leg up on others as far as what's going on in the market, the internals. It's analogous to this. The patient can be in front of you and look fine, but internally, they may have something going on that's bad. Am I forecasting, oh, it's over? No way. We don't forecast. We just get in line with what is and we look for divergences. If the market's hitting highs, I want the up volume to be participating with it. Just something to consider. Anyway, I wanted to share this with you. It's worth your time to study. One of the things we strive to do is, without going deep, fancy stuff, just looking at the market internals. There's tremendous amount of information and knowledge right here. Every night we make this video for VIPs real time. Every night they look at these charts. I don't look at this, and I really don't look at this too much, okay? But I do look at this. All right. Oh, by the way, is this a panic situation? No. We're near highs. 10-day moving average of new highs is hanging in. That's good. We just like to see some up volume participating with it. Small red flag, and you saw what happened on Friday. Not a good bar. Not a good bar. You combine it with the action of the leaders, not so good. Anyway, I wanted to share that with you. We do this every night for the VIPs. We don't take this along with it, by the way, please. We go through it very quickly, but you can glance at it, and I just make a commentary on what's happening. I wanted to share it with you. I hope it helps you. Knowledge is power, and our goal is trying to give people, our members, that power. Thank you.